Hi everyone, welcome back to the audit and attestation class. In this class of assessing the risk and developing plan response to those assessed risks, we'll be covering in detail about risk assessment procedure, including identification of risk, which include inquiry procedure, analytical procedure, observation and inspection procedure, determining the need to involve specialists and any other procedure. So let's dive into to understand more in detail about the respective procedures. In this, we will be first starting with the risk assessment procedure, include like identification of risk. So how do we identify the risk? So first of all, to identify the risk, like in a planning stage we have discussed, first we need to understand the overall entity, their environment, their controls, their standard operating procedure, their process narrative, their you can say overall procedure, how they operate the organization, right? So first thing is obtaining an understanding of entity and its environment, which we have discussed in detail along with the control environment and COSO framework, right? So same thing is being required to assess the risk in detail at the entity level, right? And then the relevant control. Have you heard about risk control metrics? Have you heard about this terminology, risk control metrics in audit?
Yes, sir.
Right. Do you mind sharing like what's your understanding on that, risk control metrics?
So it's ideally a listing of all the risks present in an organization, which kind of lists down all the risks, controls mapped to it, along with their assertions. Like it has all the details of risk and controls and all the relevant information that would be required. So usually I think there are risks, controls, risk ranking, then they have assertions, and they even have let's say process owners or like the owner of those controls. So all of that information is present in the risk and control reports. And then it also tells the frequency. Apart from frequency, it also tells whether it's a management review control or not. So, I mean, all the important aspects of a control is kind of captured as part of that presentation.
Yeah. So this is like risk control metrics for one of the entity. Like this, how like we have mapped all the controls and in which framework the controls are. If you see here, you will see like accrual expenses, lease, journal ledger preparation, journal ledger closing, consolidated financial statement, credit cards, global consolidation process, leasing, payroll, cash, and all those debt, equity, entity level controls, litigation, market equal expense, pension. So this is just an overview, like how the this overall risk control matrix looks like. So here we have given the number of risk number, then in which this risk is being associated to which financial statement line item or disclosure, and then corresponding control to mitigate that risk, right? And after that, if you see like whether this control is a key control or basic control, like we discussed, the management may have like n number of controls to mitigate their business risk, but all controls are not mitigating the audit risk. So we are being more focused toward the audit risk, right? So here what we have mentioned as a key are being like controls mitigating the audit risk, not the business risk only, right? So that's how. And then like type of control, if you see like manual control, IT dependent manual control, application control. So what category of control is, and then the frequency of the control, how frequently that control happen, whether it's happen annually, semi-annually, application control, daily basis, monthly basis, quarterly basis, or any other random frequency they have, right? And then we have given the rating to the control. So is it like basic, high, or low, right? And then like, is it a review control or not? So, right? And then is it a group wide control, or is it like specific financial statement line item control, or is it at a component level control, right? And then when this control has been last time tested, So yesterday we were discussing like if any control has been tested in previous year, does it require to be tested in current year, or we can skip that. So this strategy need to be held, and then whether we are planning to reliance on the internal audit work, or are we planning to do independent audit of those controls, right? And then the timing also, what time we are planning to do. Are we planning to do in interim period? Are we planning to do at year end period, right? And then the significant risk which has been identified to those respective assertion, and then objective of this control. And then after, like if there is any roll forward period required, for example, if you have done the interim audit for Jan to September period, so whether any roll forward testing is being required or not, right? And then the effectiveness of IT process at the year end or at the interim updation of that. So this is how like the overall, you can say, risk control metrics look like. Does that make sense? Are you guys with me?
Yes, sir.
Right.
Yes, sir. Yes, sir.
So, like some of you have already done audit, so you might have some idea. In US environment, it is being mandatory for the issuers to have a risk control matrix. So this is something mandatory for the company to have a risk control matrix. So generally, like internal audit team prepare this, and then as an external auditor, we identify what all controls are being impacting the financial statement line item, and those controls would be considered as a key control. And then we identify which one is manual, automated, IT, frequency, number of testing we need to do, number of testing internal auditor is doing, whether we are planning to rely on them, whether we are not planning to rely on them, and is this control has been tested in previous year, whether there is any change or no change. If there is no change, can we continue without testing, or do we need to test? Like, so all those things will comes over here in the risk control matrix, right?
So nowadays we have even seen like there is a column for testing attributes as well.
Yes, yes. So this is like 2-year-old one. I just thought, just for your information purpose, to share with you, right? So now keep that risk control matrix in your mind, which we have seen in an Excel sheet, and then let's try and understand. So you can correlate this theory with those practical examples. Risk, first thing is like understanding an entity or overall entity and its environment, relevant control that are related to the audit risk. And then class of transaction. Class of transaction mean like looking at the chart of accounts, right? How do you know what is chart of account?
Yes,
Have
sir.
you guys, yeah, and
Yes,
do you
sir.
mind explaining what's your understanding on chart of account?
So, sir, chart of accounts is basically where all the classification is done relating to the ledger, and what are the respective heads in each of the financial statement major head, like P&L items. There are expenses, then there is further sub classification, and all that is integrated and automated with the computer system and put into that, and we put we have codes for everything and anything that is into the financial statement, and that is a chart of account, and basis which yes, we prepare our financial statements and our accounting is being done.
Yeah, absolutely true. Mapping of your respective accounts in such a fashion that it will give you the result of trial balance or financial statement according to the reporting framework, right? So understanding of those chart of account, like which class of transaction or which account balances are going in assets, which account balances are going in liability, which account balances are going in equity, which accounts are being relating to P&L items, sales, expenses, cost of goods sold, payroll expenses. So understanding of those class of transaction and the required disclosure as well. And that is first thing, you need to build an understanding around the overall financial reporting framework and the entity environment, which include their legal and regulatory environment as well. Then these procedures are used by the auditor as audit evidence to support the assessment of risk of material misstatement. So what all procedure you will be performing to for the risk assessment? First one is inquiry. So you'll be doing inquiry with the management, right? So to start any audit, first thing you will be initiating the inquiry with the management, right? You will be understanding from the management what all they do, right? What is their overall business is, what is their sales, what is their expenses, what are the nature of their business, right? The basic inquiry first, before getting into audit, first step is always be inquiry with the management to gain an understanding about the business objective, lines, nature of transaction, right? Then second, inquiry with others within the entity. That means first you'll be inquiring with the management, and then when you go to the process level, then you'll be doing inquiry with the sales people, purchase people, payroll people, treasury team member, to understand more in detail at a granular level, right? And then if needed, or wherever needed, you will be doing inquiry with the outsider as well to gain more understanding, like legal counsel, what all litigation, claims and assessment that company do have, right? Or maybe with the customer, maybe with the vendor, maybe with the you can say contractors, right? So to gain an understanding about the arrangement between like company and the vendor, whether the company do have any other commitment in addition to they are getting the material, right? Or they have any long-term commitments to any customer, do they have any warranty commitments to their customer, do they have any guarantee commitments to the customer. So to gain an understanding about the respective arrangement, you will do the inquiry procedure with the third party as well. Second is analytical procedure, to gain an understanding about the company and to assess the risk. So if you remember, in our very first class we discussed about planning analytics. So there are three types of analytical procedure which we perform in an audit. First one is planning analytics, which is called overall planning analytics. Second one is you can say disaggregated analysis, and third one is conclusion analytics, right? Do you remember that in first class we discussed it?
No, sir.
No idea.
I don't remember it.
When we are discussing like overall flow of the audit,
Yes, yes, yes.
right? In that we have discussed like at the planning stage, we do the planning analytics. In that we generally do high level analysis of variation basically between like all the assets to assets, current year to previous year, all the balance sheet level, profit and loss level, and cash flow level, and just to understand what are the major or material variances, and then we inquire with the management to understand more in detail why those variances are, right? So in the planning analytics, actually it assists the auditor in planning the nature, timing, and extent of the audit procedure. So any of you have done any planning analytics? Maybe guys with the audit background. Have you done any planning analytics like Nimisha, Kushagra, or Sanchit, Jaspreet?
So as a part of रिस्क असेसमेंट जो एक एनालिटिक्स वगैरह बनते हैं उसमें करा है थोड़ा बहुत.
Have you done the planning analytics like variance analysis at the planning stage?
Just as a part of risk assessment, उसके अलावा कोई अलग document if there's something PCOB specific उसका मुझे idea नहीं है.
No, it is not PCOB specific. It's for any audit to understand that you can say entity at account level in detail. We do the planning analytics. In that, basically what we do is
So flex analysis, right?
Yeah, sorry.
So it will be more like a flex analysis, right? Compared
Yes,
to prior year,
yes.
you're setting an expectation, making sure
Yes.
the variation is within your expectation, and if it is not, then you're trying to investigate what can be the probable reason, and then accordingly you're designing your audit plan to,
Yeah.
make sure that you're addressing all of those.
Yes, yes, absolutely true, absolutely. So like maybe just to simplify what question Nimisha has shared, you have like all assets. Like, have you seen all balance sheets which I have shared with you guys? Have you guys seen that financial statement of two companies which I shared with you?
Yes, sir.
Which one you have seen?
So General Motor.
General Motors. What is that? So So let me open this for you. So this is like here you can see like assets and liability. You have current year balance and you have previous year balance. And then you add like one column as a variance between current year and previous year. And then you have already set the materiality. So any amount above that materiality level, you will be inquiry with the management. What is this changes? To understand more in detail about the nature of transaction in those respective financial statement line item. Make sense?
Might
Yes.
be a stupid question, Kamal, but isn't this more of like a concluding analytical procedure that you're talking about?
No, we also do at conclusion stage, but we do at planning stage as well to understand the nature of account balance and transaction. For example, let's say for this one. So let's do this here. So, ouch, oh, it didn't turn out well. So like generally like these are account balances. You know, if I do all this cosmetic thing, it will take a long time, but I can tell you it with one example. Right. So this is like your current year balance. This is your previous year balance, and then you do current year minus previous year. This is your variance, right? And then you put remarks. So if it is like more than the materiality level you have set, then you will be discussing with the management and understanding what is the change in this cash balance. Same way like for this notes and receivable. So this is how generally like planning variation work basically. So this is like you see more than 50% variance. So you can say percentage variance, and then you can put plus this divided by previous year number. So here you can put like percentage, right? So here you see like more than 100% variance, right? So you definitely would like to know more about this, what has changed from previous year to current year, right? This will help you to understand the respective account balance and transaction in the financial statement. That will help you in setting up nature, timing, and extent of the audit procedure for those respective financial statement line item. Make sense? Yes, no?
Yes, sir.
Right?
Yes, sir. Got it.
So now coming back to the notes here, analytical procedure. So first one is planning analytical procedure. It assists an auditor in planning the nature, timing, and extent. Because if you see, let's say this 5% variance, maybe not material, right? It's immaterial, but it is more than 100% variance, right? This is material variance for you, right? So here you would like to know more what new things we have purchased, right? What we have done with the old things. What is the overall movement in this account, right? Because this is material change. So it helps you in planning the nature, time, and extent of your audit procedure, right? Of the audit procedure, focus on enhancing the auditor understanding on and identifying the risk, right? Second is substantive analytical procedure, which we do at the execution stage, right? When you are conducting an audit of respective financial statement line item. Now, let's say at the planning stage, you have done this analysis, right? Now you're doing execution, right? At that point of time, you are testing marketable debt security, which has a variance of 117%. So there you will be doing a disaggregated analysis. In marketable debt security, there might be certain security with the private company, with the public company, maybe with the trust, or maybe given any loan to the individual. So you'll be doing a, you can say, disaggregated analysis, how much debt we have purchased in the previous year for the known issuers, for the issuers, for the trust, for the society, and maybe for any individual. So you'll be doing at this segregated level of analysis to understand from where exactly this change is coming up, and which new you can say strategies or new loans or new borrowings or new investment that company has made, right, at a specific line item within that you can say marketable debt security. If you go to the let's say note number 4 in this financial statement, right, here you are saying like this marketable sorry, 1 second. So here they are saying it is note number 4, which is explaining this marketable debt security, right? If you go to the note number 4, right, so here you can see at the retail level for the marketable debt security. So they have invested in US government agency 1771 compared to previous year 226, right? So for example, for detail analysis, you'll be analyzing this one. So that will be called as a disaggregated analysis. For example, marketable security, you're analyzing here. So in here, if you see, so it will looks like this. And corporate debt, this, and then mortgage of asset-backed security, like this, and then sovereign debt, right? And if you see the total, you can do the math over here. Simple. The total is this, right? And then the variance of this minus this. So here you get to know exactly in which line item they have done the major change, and then you will verify the supporting document of the same. Right now, if you see this 117 is majorly impact of this and this, right? So maybe these two might not be material change, but these two are like major change from previous year to current year, right? Make sense? So you'll be investigating more what US government agency bonds you have purchased in current year and why. Like I'm trying to understand the business rationale for that. Same way they have brought like $3,000 sovereign debt fund, right? Why the company has brought this? What was the business rationale for it? And then the supporting document also you will be asking to verify, right? Make sense? Yes,
Yes,
no?
sir. Yeah. Yes.
So first level of analysis is a high level analysis at the financial statement line item, right? And then the second analysis would be for the respective financial statement line item at the disaggregated level. So this segregation between these four is called disaggregation analysis or detailed substantive analysis, right? Now let's come here. Third one is overall analytical review. So this we do at the conclusion stage. So once you have done the planning, you have identified the risk, you have planned the audit procedure, you have conducted the audit procedure, you have done the substantive analytical procedure. Now, when you are finalizing the audit, before the finalization of audit or before the signing up any financial statement, it's a mandatory procedure for an auditor to do an overall analytical review. So overall analytical review is again in this same fashion at the balance sheet level, at the P&L level, and the cash flow level and notes to accounts level, where you ensure whatever the major variants are coming in the respective account, you have ensured that you have performed the appropriate and sufficient testing, and you know each and every variance and their reasons to it, right? That is called overall analytical procedure. Maybe at planning stage, let's say this marketable security balance is $9,000 compared to $4,000. When you have done like detailed testing, you got to know there was more $1,000 investment, which was parked in the current assets, right? Then you have done the reclassification from current assets to marketable security. So at the time of finalization of balance sheet, your balance here would be $10,000 and here it would be $18,000, right? That may be also possible. And then when you conduct the audit, there might be certain adjustment entry, summary of adjusted differences, which you will be proposing to the management. And if management is agreed to it, they are accounting for, then this balance of the current year will get changed, right? So there is a possibility that what you have done in the oral planning analyticals, the balance sheet item and cash flow item and income statement item would be different than the oral analytical procedure based on the changes you have recommended in the journey of your audit. Make sense?
Yes, sir. So the quick question.
Yeah.
OAR is mandatory, as you said, both for
planning and
issuer and both for issuer and non-issuer, right? So
Mhm.
the other two steps that we talked about, like the planning, analytics, and substantive analytical procedure, is it also mandatory for both issuer and non-issuer?
Yes. Yes. So this is like I can't say mandatory. It has not written in any accounting standard. Yeah, that's but this is like one of the thorough procedure which will address the overall risk at the financial statement level.
Right, so this is something that we perform before the substantive testing, or in
Yes.
issuer it will be after control testing, and or like as we mentioned, planning is separate and substantive is
Yes,
separate.
because at the planning stage, maybe you will be doing planning in September, let's say, and then you are taking June balances, and then you will be projecting the December balance. You know, like half year performance multiplied by 2 would be your full year performance. So that's maybe like current year number are your estimated number, not the actual number. But when you are doing at year end the final analysis of OER, then at that point of time it will be your actual number.
Actuals.
Right? For some time for the non-issuer, or you can say most of the time for non-issuer, we do like planning, execution and completion after the balance sheet date, right? But for the listed company, we do in advance.
Break it out. Yes.
Right? So we do planning like taking June as a cutoff generally, and then we do substantive testing considering like September as a cutoff, and then final year and testing at the December balances. So in that, there are a lot of projections is being involved, like what would be the year-end numbers, especially in the income statement, right? So those numbers will definitely change for the issuers, and for non-issuer, it depends on how much adjustment has been made during the audit. Right? Any doubt here, guys? So far, so good. Yes, no, kuch to bol rahe yaar.
Yes, sir.
Yes, sir.
Yes, yes.
Cool. Okay. So example of analytical procedure are variance analysis, ratio analysis, month-on-month analysis, right? Correlation analysis, like sales to account receivable to cash, and gross margin analysis. Do you know like gross margin analysis? What is gross margin analysis? Do you have any idea?
So वही हो गया gross margin जितना होता है उसका analysis की year on year कितना there has been an increase or decrease in the gross margin, you know, before accounting for the fixed expenses. So we get an idea of how much sales have increased and direct expenses in relation to that, and we can find out what is the actually business profit before direct expenses and everything, before all the.
Yeah. Anyone else would like to add? Yeah. Anyone else would like to add, Ayush? Or you are good what he has shared? Yeah, like you guys are in sleep mode today. Are you guys with me?
Yes, sir.
I'm with you.
Yeah, I can hear you, man.
I have your back.
So yeah, for example, here, if you see like the sales minus cost of goods sold will give you gross margin basically, right? So here you have 2018, 19 and 20 number. So what will be your gross margin analysis basically? So if you see this one here, why it's not good. So you got these three numbers. So this is like your net revenue. This is your net revenue. Let's go with the total one. I'm not getting much into small details. Let's see the total number. This is your total revenue from different entities and different segment, right? So here this is your total revenue. Then you see cost of goods sold. Cost of goods sold. This is for financial interest, or you can say this is your total one. One second. So this is your cost, total COGS at the entity level, right? So here you will be analyzing the gross margin. So your automotive business sales is this, and automotive cost is this, right? And your total revenue is this, and your total expenses are this. So this is your period over period gross margin. Automotive business. And this is your gross margin for total business. Right here, you will do like analysis like this gross margin to cost of goods sold. How much is your gross margin in terms of percentage? 11%. And same way this divided by your total expenses, and you will see this. So you will see like you will see period over period gross margin is increasing from 10 to 11%, right? Are you guys with me? If you see the overall gross margin period over period is increasing, so it's showing like a positive trend. If you see like it in 2018 it was 10.27%, then it has increased to 10.89, and now it is increased to 11.41. Same way like overall at the entity level is also it's increasing from 3 to 4 to 5%. And this kind of analysis is called gross margin analysis. So what it actually helps you in understanding whether the company is a profit making or loss making, whether there is a going concern issue or not, right? Make sense?
Yes, sir.
Okay, objective of analytics is to identify unusual transaction or event. So objective of all this analysis is basically to identify unusual transaction or event in the respective financial statement line item. An auditor should consider the result of such analytical procedure along with other information gathered in identifying the risk of material misstatement. So when you do the respective analysis of respective account balance, whether at the planning stage or at the execution stage or the completion stage, you gain more understanding about the respective line item, nature of transaction in that respective line item, and you can plan better audit procedure to conduct the audit of those respective line item, right? So if you see here, what are procedure we perform for the risk assessment? First one is inquiry, second is analytical procedure, and third one we are jumping into observation and inspection. So observation, like for example, inventory count, we are observing the inventory count. So you do not do inventory count, management do inventory count, but you observe that count, whether management is doing right or not, right? And you will do some random sample testing. Same way, like for example, fixed assets, right? So management do physical verification of the fixed asset. It's the primary responsibility of the management, but you as an auditor will be just observing whether the management is doing appropriately or not, right? Same way, for example, when you perform the walkthrough around like automated control, in that case of scenario also you will be observing how management is doing the respective posting, right? In that case of scenario also you will be doing the observation procedure. You're not doing any execution, you're not doing any review, you're just doing an observation whether like when management make an entry, is it being reflecting in the correct account or not, for example, if an automated control, right? So you'll be observing that into the accounting system. Second is inspection. Inspection include like verification of document, document records and internal control manuals, reading reports by the management or those charged with governance, right? And the board minutes of the meeting. So for example, like when you are testing purchases, so you might be testing purchase requisition, purchase order, good receipt note, shipment document, invoice from the customer, payment document, right? So these all documents, when you are verifying, it comes under the inspection procedure. And then determine the need for the involvement of specialists. So when you are doing risk assessment process, first you will be doing inquiries, then you will be doing analytical procedure, third you will be observing and doing inspection, and wherever needed you can request for the specialist or you can involve the specialist. Specialist can be your management specialist or can be your auditor specialist, right? For generally, like for the legals, claims and assessment, litigation claims and assessment, we rely on the management specialist, whether it's an internal specialist or external specialist of the management, because we do not have that much expertise, right? So we do inquiries or we do discussion or we ask for the confirmation from the lawyer.
Sorry for stopping you in between. मुझे बस एक confusion आ रही है. So the topic that we are under says procedures to perform risk assessment. कि हम लोग ये सारे cover कर रहे हैं. What are the procedures to perform risk assessment? Why are we talking about a concluding analytical review and an inspection? Like it's concluding analytical review is at concluding stage.
Very good point, Nimisha. So risk assessment is a process you are not supposed to do only at the planning stage. It should be throughout the journey of your audit. So all the time when you're performing different procedure, any item which may increase the risk at the respective financial statement line item come into your attention, you will be updating your risk assessment, and accordingly you'll be changing your audit procedure based on the need. So there are, like in audit, there are few things, there are most of the things which will go parallelly throughout the journey of your audit, whether it's like, for example, independence of auditor. So you need to maintain independence throughout the audit, right? Risk assessment, you need to keep in mind all the time when you're performing the audit. Professional skepticism, you need to maintain throughout the audit, not only at the planning stage or conclusion stage. So that is the reason we are touching base all these things here, but we'll be discussing more in detail in chapter 4 in the execution stage. Very
Kamal,
good point.
theoretically what you're saying is right, but practically मैंने ऐसा सिनेरियो देखा नहीं जहाँ हम लोग एक बार रिस्क लेवल डिसाइड करने के बाद उसको रिवाइज करें. मतलब I haven't come across a situation. आप कोई एग्जांपल दे दो.
Yeah, like we did on like General Motors audit, for example. Initially, like we assessed like warranty as a significant risk area, and then we like when we have performed the audit, we come down like it's not required to be a significant risk area, and we drop it down the risk level, and we have reduced the audit procedure for that. Same way, like litigation claim and assessment, probably initially you may not have considered as a significant risk area, but when you have conducting the audit and you come across with any severe litigation against the company, then you may consider that as a significant risk area, right? It depends on like you can say the events which come across during the audit. If there is any,
I have an example as well. So in my company as well, in which I was working previously, so the audit was going on, and the litigation area was almost clean. Like we had already mentioned what all litigation we are into and what all are the penalties and interest we'll have to pay maybe.
yeah.
Okay, but then in between when the audit was going on, there was a particular DGCI case. That's a special investigation case for GST audits and everything. And they had sent us a notice, and the penalties were huge in that, and the amount of tax which we had to pay was huge. So auditor, we had to again discuss with the auditor, and he kind of revised everything. The audit procedures were revised. We had to give in a lot of information again to the auditors, because obviously they were concerned that this is a big area where we need to look into.
Yeah,
So yes, it happened with my organization as well.
Yeah, absolutely. In many company like we have done like revision in the risk assessment also. Like for example, I was doing audit of like one manufacturing automobile company, so where we found like fraud in sales incentive, like almost just 2 weeks before the signing of the report. Can you imagine? Like it was so hard, like so much extensive audit procedure. We need to involve 2 more additional team members to finish that audit area when we come across like fraud in the sales and incentive of that automobile entity. So it happens, but you are lucky you not come across with such situation yet, and we do not have that much great luck. Like for example, like yesterday class I was discussing the fraud I have identified in a transportation expense. So there like it just like maybe 3 or 4 weeks before the signing update where we have identified, and then we involve like our fraud risk team. So at that point of time I was working with EY Mumbai, right? So there was specialist team of the fraud risk, right? We have given them this assignment to them, and they have you can say done the detailed investigation on all those transporter, right? And they come across like those all are fake transporter, and someone is doing like you can say scrap dealing work. Someone name or PAN number or TAN number does not even exist, right? So that's how like we conclude like these are not the transport dealer. Why you are making transport payment to them? They do not have any vehicle even, and you are making like lakhs and lakhs rupees of transportation payment. So it happens depending on like the event and situation which you come across during the audit. Right? Makes sense, Nimisha?
Yeah, thanks.
Cool. And then other procedures. So other procedure, confirmation from third party, including like external legal counsel, valuation experts, right? Nature, timing, extent of the risk assessment procedure are depending upon the size and complexity of the entity. Generally, like other procedures, nature, timing, and extent of those procedures are majorly depend on like how big the entity, how voluminous the transaction are, how complex the transaction are, and accordingly as an auditor we need to design those audit procedure. And the risk assessment is an ongoing and continuous process throughout the audit engagement period. So it's not one-time activity which you do at planning stage and then you have left behind. No. So this is something continuously you need to update as and when new situation, events, or information come into the attention of the auditor, right? At the planning stage, when auditor plan to use the information from prior year audit, the auditor should determine the effect of change that may be relevant in the current year. So when you do like planning analysis, at that point of time, you will be analyzing what all informations you have already have from the previous year and how much information are still relevant for the current year. You can use those, but those area where the previous year information is not relevant, it's better to take new evidence or new information from the management for those respective area. And documentation, most important thing, work not documented, work not done, right? So as an auditor, we need to document the key element of understanding obtained, right? So like for example, some of you are working with Big Four consulting firm. I'm sure you might be having a document understanding the business, UBT or something like this. You guys know about this?
Yes, sir. UTB template, yeah.
Right. So what exactly is this? Understanding what all understanding you have obtained regarding the entity and its environment, you'll be documenting that in the understanding the business template format, right? Same way, other firm also, like it's being a kind of mandatory thing, like each one of us, when we are conducting the audit, we need to document properly what all understanding we have obtained about the entity and its overall environment, including legal and regulatory environment. Second is component of internal control. So all component of internal control. I'm sure you all, whenever you are doing audit of an issuer, so you'll be considering like the COSO framework checklist, right? That's also being a mandatory audit procedure. In that, you'll be ensuring the respective component and principles of the COSO is being adhered by the company. So what all policies and procedures that company do have to adhere to the all 5 component and 17 principle of the COSO. For that, you generally maintain a detailed COSO checklist. And for non-issuer also, you understand like overall control environment and document that. Next is source of the information obtained. This is also important. Like from where you have obtained the source, from whom you have made the inquiry, what time you have made the inquiry, or from where you have received, let's say, any communication or any email. It's being very much required to document the source of information. Sometimes, for example, if you're doing like testing of valuation of securities, right? From which stock exchange you have taken their prices. So it's being mandatory to mention those respective stock exchange date, timing, at what time you have taken the market value. Same way, like if you are doing any inquiry with the management, from whom you have inquired, right? Is that person is competent and capable enough, right? So all those things you need to document properly in all your audit work paper documentation. Fourth is assessment of the risk of material misstatement. So your overall risk of material misstatement assessment also need to be mandatorily documentation, and then risk assessment procedure which you have performed. So risk assessment and the procedure to assess the risk which you have performed are the mandatory documentation for an audit engagement, right?